Hi, I'm Mike Larson, editor of the Safe Money Report. Here in the U.S., we have a problem, a lack of courage in Washington. Specifically, the courage among policymakers to make the difficult decisions and take the difficult actions to deal with our financial problems. For one thing, our politicians are preaching budget restraint, but they're pursuing the greatest budget-busting tactics of all time. Recommendations by the National Commission on Fiscal Responsibility and Reform, issued just 3 months ago, have been all but forgotten. President Obama's budget, released only 10 weeks later, proves it. It projects a massive $1.65 trillion deficit for fiscal 2011, and more than $7.2 trillion in additional deficits in the decade thereafter. Meanwhile, our central bankers say their mission is to fight inflation, but they're poo-pooing surging prices, refusing to slow down the printing press, and pegging interest rates near 0%. Fed Chairman Ben Bernanke has made it crystal clear in congressional testimony that he has no plans to change tax. As a result, our currency is tumbling against virtually every form of money on the planet, especially gold, which set a nominal new record of $1,437 an ounce this week. Meanwhile, other agricultural and energy commodities are going ballistic. But you know, there are many countries that are taking a different approach. And there's one nation in particular whose fiscal and monetary policies actually look like they're taking a turn for the better. That country? The United Kingdom. Now, like the US, the UK has spent several years over-promising, over-borrowing, and overspending. That's left the country with a debt load equal to roughly 61% of GDP, the highest since 1970. Meanwhile, its budget deficit surged to 11.4% of GDP in 2010, one of the worst among developed economies. But unlike in the US, British policymakers are actually taking steps to right the ship. It's what I look at as a titanic battle between reckless Keynesian policy in the US and painful but necessary austerity in the UK. And I believe it's one the UK is going to win. Will it be easy? Not at all. Prime Minister David Cameron over there is jacking up taxes and slashing spending in several arenas. In national defense, Britain is cutting its annual military budget by 7.5%. In public services, Cameron's proposing that volunteers or charities take over the operation of many schools and hospitals to reduce government costs. In retail, the UK's value-added tax just rose to 20% from 17.5%. And in education, the cost of attending university is going to double at many schools in 2012, and even triple for some students. Britain's monetary policy may also be turning more hawkish. 3 Bank of England members voted for interest rate hikes at the last policy meeting, much more dissent than we have here in the US. Now, I'm not going to suggest these moves are completely without consequences. Short-term growth is suffering, with British GDP slipping by 0.6% in the fourth quarter. But I believe that short-term pain is going to be offset by long-term economic gains. Heck, you can already see the process starting. Money's flowing away from the US and toward the UK in the currency markets. For example, the dollar index is at a multi-month low and threatening to break down from a 3-year uptrend, while the British pound is just shy of a 14-month high. This underscores the message I've been preaching for some time. You want to invest in countries with disciplined, prudent fiscal and monetary policies, and just avoid the rest. Some countries that make the cut in my book include the UK, Brazil, Singapore, New Zealand, Australia, Switzerland, and Canada. You have a choice as an investor in investing in either their short-term government debt securities, companies based in those countries that often have US-listed shares, or ETFs that offer you diversified national exposure, such as the iShares MSCI Canada Index Fund or the Currency Shares Swiss Franc Trust. All of them are valid opportunities and ways to profit from these countries and their prudent fiscal policy. I'm Mike Larson for Money and Markets TV. Thanks for watching.